When you hear the word fintech, what's the first thing that pops into your head? Probably an app on your phone, right? Something sleek and simple. Well, today we're going to talk about how fintech is quietly breaking out of our phones and showing up in some of the most unexpected corners of our lives.
I mean, it really wasn't that long ago, was it? Fintech was kind of like a cool party trick. It was a slick app for your social life, super convenient for sure, but, it wasn't essential. Well, that is all changing.
And this is the massive leap we're talking about. The jump from splitting a pizza bill to buying a power tool. That's not just about a different product. It's a huge shift from a social convenience to the actual nuts and bolts of how we all shop.
To really get what's happening, we're going to connect three dots that honestly seem like they're miles apart. But by the end, you're going to see how they all point to the same thing. Fintech is moving from an app you choose to use to an invisible infrastructure you pretty much can't live without.
Okay, so our first story kicks off in a place you probably wouldn't expect to find cutting-edge financial tech, your local hardware store. Yeah, this is all about how you can finance your next lawnmower, and it's all thanks to a company called Affirm and this thing called Buy Now, Pay Later.
So first, what exactly is BNPL, or Buy Now, Pay Later? Well, it's pretty simple. It lets you split up a purchase into smaller payments, usually interest-free, right at the checkout. It absolutely blew up online, but where it's going next is what's really fascinating.
And this is the kind of scale we're talking about. Over 5,000. Just let that sink in. That's not some tiny pilot program. That is Affirm planting its flag in thousands of Ace hardware stores. That is a massive footprint in a very, very traditional retail world.
And this move, it reveals a really brilliant strategy. So Affirm is already a giant, right? They've got partnerships with Amazon and Walmart. But now they're pivoting. They're steering BNPL away from the fun stuff, the treat-yourself items like fashion or gadgets, and aiming it right at practical spending, the tools a homeowner or a contractor actually needs. It completely transforms BNPL from a want into a need. I love this quote because it just perfectly captures the whole vibe shift. I mean, financing a drill just feels so different from financing a pair of sneakers, doesn't it? It's gone totally mainstream. It's become, well, kind of boring and predictable. And that's the whole point. It's just a reliable tool that's always there. So, the big takeaway from our first story is this. Affirm is embedding its tech deep into the world of essential, everyday purchases. It's becoming the invisible financial plumbing for home projects and small businesses.
Okay, so fintech is changing how we spend money on the important stuff. But what about how we actually get our hands on that money in the first place? Well, that brings us to story number 2, getting your paycheck on demand, thanks to companies like DailyPay.
And the core idea here is something called Earned Wage Access, or EWA. You can basically forget the whole 2-week pay cycle. EWA lets you get your hands on the money you've already earned whenever you need it. It's a total rethinking of what payday even means. Now, it is absolutely critical we make a distinction here between EWA and those predatory payday loans. See, EWA is about accessing your own money early for a small fee. A payday loan is a high-interest debt you're taking on from somebody else. And that difference isn't just a technicality, it is at the absolute heart of a huge regulatory fight that's brewing. So DailyPay is already a massive player. They work with employers like Kroger and Target. But right now, they're at a serious crossroads. Regulators in Washington are looking at this whole model very closely, and they just brought in a new CEO. This isn't just shuffling some chairs around. It's a huge signal that they're getting ready for a bigger stage and probably a bigger fight as they get closer to a potential IPO.
This is such a perfect way to think about it, isn't it? The money is legally yours. You've already put in the hours. But getting it ahead of schedule, it just feels like you found a clever life hack for an old, clunky system. Kind of like using your friend's Netflix password.
So, what this all tells us is that the whole EWA space is growing up. DailyPay is getting its armor on for a big battle to prove that it's an essential piece of financial infrastructure, not just a clever loophole, as it marches towards going public. All right, for our third and final story, we're doing a complete 180. We're going from the absolute bleeding edge of fintech to the very heart of the old guard. We're about to see how a banking giant that's been around for over a century is quietly using radical new tech to rebuild its own plumbing.
I mean, this timeline really says it all, doesn't it? A bank founded more than 160 years ago is now experimenting with blockchain, the kind of tech you hear about with crypto, to move its money around. It's just a wild collision of the old world and the new.
Okay, so how on earth does this pilot actually work?
Well, think about it in 3 simple parts. First, UBS creates what are called tokens, which are basically just digital versions of real-world money market funds. Second, a company called Chainlink provides oracles, which is a fancy way of saying they securely feed real-world data to the blockchain. And finally, Swift, the trusted messaging system banks have used for decades, is still there. It's this really fascinating mix of brand new tech and old trusted systems working together.
Ha! And this analogy just absolutely nails it. You know, when the most conservative, established players in the game start to adopt a new technology, it's not some niche experiment anymore. It's a sign that there's been a fundamental mainstream shift. The party is officially legit.
And this is what's so incredibly significant here. This experiment shows that the technology behind crypto is being separated from all the speculative coins. It's being repurposed as serious, core infrastructure for the entire global financial system.
So, we've looked at 3 really different stories from 3 totally different corners of the financial universe. Now, let's pull the camera back and look at the one big idea that ties them all together.
Right? We saw Affirm embedding payments right there in your local hardware store. We saw DailyPay trying to completely redefine what a paycheck even is. And then we saw UBS using blockchain to rebuild the very rails of global banking.
And that is the single thread that connects all of them. Fintech is moving past being a shiny app on your phone and is becoming the invisible, essential plumbing that just makes modern life work. It's not an add-on anymore. It's becoming the foundation.
So, that leaves us with one final thought to chew on. We've already seen fintech pop up in some pretty unexpected places. So the real question now is, as this tech gets deeper and deeper into the foundations of our world, where is it going to show up next without us even noticing?